How's it going? I'm Andrew with Investors Hub, and I'm getting too fat for my vest here, so no vest today. And I don't like to take forever on these intros because you're not here to get investing information from me. You certainly don't want investing information from me. So we're going to be talking to Jea Yu. He's on the show quite a bit, and he writes for MarketBeat, and he's going to be talking to us about a possible market pullback. He's also going to be sharing some stocks in the stock market that he's watching right now, give us some price targets and things like that. So yeah, if you like the video, be sure to like, comment, and subscribe. And if you think of somebody that wants to learn more about investing, be sure to share it with them. And yeah, let's hear from Jay. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So Jay, you think we're going to see a market pullback soon?
Well, Andrew, they say sell in May and go away, right? And historically, that's been true. What's been happening is if this market is probably making a lot of people shake their heads because you're seeing the S&P 500, the Dow, the NASDAQ making new highs every day. But if you own, God forbid you own an EV maker, electric vehicle stock, or a SPAC, a recent IPO, or a lot of these stocks, a lot of these momentum stocks, they're selling off. A lot of these guys are in bear markets already. So we've gotten to a point where the market is just it loves to be disconnected. There used to be a time where when the financials are strong, you'd see the SPY run up. When the techs are strong, you see the Qs run up. But now, you have, like I said, EV stocks selling off. You have chip stocks that have been selling off nonstop, yet the NASDAQ's making new highs. So there's already bear markets within the indices. You get this thing called the melt up. And the melt up just means that all you got to do is just push the S&P 500 past a certain price level, and then you'll take it to the next level. Past this resistance level, then you take it to the next level. So it looks like the market is just doing gangbusters, doing great. But meanwhile, it's hollowed out because all these companies are getting sold off. I believe that, yes, we will have a general market sell-off. Absolutely. And one of the dead giveaways was last week this week, when Apple came out with their numbers, my jaw hit the ground. The numbers were amazing. And it popped to about 139.50 in the post market and then just started selling off. So on television, CNBC, everyone's just coming out with their pom-poms saying how great the numbers were. And they were great. And they're selling off right into it. I believe when Apple went into the earnings release, it was trading around like 133, whatever. It's down for the week, 131 and change. So when you get a company that comes out and the numbers are just phenomenal and they sell it off, it tells you a lot. So this is the end of the month, last trading day of the month. So we're going into a new month. And I believe on the downside, and I go by the ETFs, so the SPY ETF. Downside, you're probably looking at 394, 386 area. That's the pullback to the monthly 5 support. And on the QQQs, probably 325, 319 to the downside. Now, like I said, the market's very dislocated. So there's going to be days where you see sell-offs, but certain industries are going to do great. The Qs may sell off, but all of a sudden the retail stocks, the Macy's or Nordstrom's, they may rise. Now, when we start to sell off harder, that's when everything can move all at once. All right. But right now, I'd say the last couple of weeks, we've just been in this limbo period that, yes, the indices have gone higher, but most stocks that people are looking at, they've actually been selling off.
So you've been negative on IPOs and their releases recently, but there was one IPO that you wanted to share with us, right?
Now there's one IPO, just one, okay? The spate of all these other IPOs that was priced right. And I think that the narrative is real good for them. And I got to tell you, I mean, they did, I'll tell you right now, Endeavor, EDR, all right? They priced the IPO perfectly. 2350 was the IPO, 2840 was where it peaked out on the first day. We got right back to that price again today. Yeah, they did that right. Now, where they kind of screwed a lot of people is they have five classes of shares. So the voting public have no voting rights. All right. In fact, 81% of all the voting is controlled by 3 entities. Okay. But you know what? Look, they're the managers. What EDR does right is they own the UFC, right? So they are Ultimate Fighting Championships. So MMA is still growing. That is one sport that's actually still growing, right? So they own MMA, they own the talent, they own IMG Talent Management, like The Rock, right? Dwayne "The Rock" Johnson, some of the biggest stars in Hollywood. Plus, they own a whole bunch of events, plays, bull riding, Miss Universe, etc. But they are a real reopening play. All right, they control the components of content. Everybody talks about content, the streaming wars, where we're buying new shows, blah blah. The movie theaters, they're worried about the blockbusters coming out, and are we going to be able to get heads into the seats? With the COVID restrictions, and the talent still gets paid. The talent still gets paid. The Rock still gets paid, right? That's where EDR comes in. EDR Endeavor, that's a great play. 24, 26, good price level. And you know what? I don't care if three guys or 3 parties own the voting rights. They've been doing the right thing, and they're growing. It's an acquisition strategy. I understand that. Those things can blow up, but so far they've been great. They've been right on. And like I said, MMA comes to MMA. UFC is handed to Dana White, handed to UFC. They did it. I mean, they're growing, and they are, they're basically almost a monopoly at this point. So love EDR.
So you mentioned a reopening play. So how much longer do you think the market is going to be able to make plays based on that narrative? Is it drying up?
To an extent, yeah, absolutely. And then when it comes to investing, trading especially, but when it comes to investing, you want to get in before the transparency becomes too transparent. I'll give you an example. The CDC came out and they made a statement saying that we're working our hardest to get all the cruises going by the summertime. So you would expect these cruise liners to just take off on that. But you know what? The market's kind of tired. So CCL, Carnival Cruise Line, they popped and sold right back down. Okay. So yeah, the reopening play is also kind of getting tired, especially reopening plays where they're not making any money. I mean, yeah, year over year, of course they're down, but from the valley, they're doing better. That's only going to work for so long, right? And like I said, when I look at stuff that I want to actually hold overnight or swing, I actually want something that's got profits, or the narrative is so strong, or there's a position, almost a monopoly position. All right, almost the narrative is just so good. Like Endeavor, the narrative is just so good. And you know what? I give these guys credit for not pricing this thing at 35, for not opening it 35, 40, $50 a share. All right, that's what I was talking about last. The greed of these underwriters, just there's leaving nothing, no meat on the bone. 2350, there's meat on the bone. All right, there is opportunity there, and the market has shown it. I mean, this is one of the few IPOs that actually went up the second day. Okay, name another IPO that actually went up a second day. Coinbase, oh no, collapse and sell off. Right, Coupon or whatever sold off. Bumble sold off. I mean, any major IPO, they all sold off. Everyone took the opportunity to unload shares.
So what stocks are you watching in the market right now?
Last time I told you how much I loved eBay, right? I got crushed on those call options. And I will say Pinterest kind of screwed it up for eBay. You see, because you got Pinterest, Facebook, eBay, Twitter, Snap. And so when Pinterest came out, they beat the numbers, but they came out and they said, oh, whoa. By the way, because of the pandemic, we got all we had all this growth, but we may, that growth may slow down when people return back to the office. They can't look at recipes all day anymore. And that killed the stock. That absolutely destroyed the stock. And then eBay kind of came out, 44% year over year top line growth. Come on. All right. I mean, as we talked about, adjusted EPS, as far as earnings are concerned, you can always work financial engineering to get the EPS to be a little higher than what the consensus estimates are. Whether you bought back shares or whether You decided not, whether you decided to give less stock to a couple people, whatever. You can always manipulate that. But the top line growth, sales top line, you can't manipulate that. All right. Well, not that much. Unfortunately, they also said because of the pandemic, we're not sure if we're going to be able to continue this type of growth. They lowered their EPS guidance a bit. To me, they just set the bar lower. All right. They set the bar real low going into the next quarter. I think they added 40 something million more buyers than consensus estimates. All right. I mean, that's the real growth. And I wrote this down. All right. 187 million buyers grew 7% year over year. Sellers grew 8% to 20 million. All right. So, eBay takes a piece of the transactions. And eBay should be thanking Disney and the Marvel comic universe because you got people paying $500 for a CGC 9.8 for a comic that was in the dollar bin, all right, because of the new shows that are coming out on Disney Plus, new movies coming out on Disney Plus. But because of that, I believe that you're going to see continued growth with the collectibles market, despite the coming sell-off. Okay, couple stocks. First of all, Nautilus, all right, NLS. Still love those guys, 9 PE. Now, because of Peloton, PTON, and that stock ran up to about 128, but then, you had that incident with the child getting sucked into the treadmill, and then the agencies coming out and saying, don't buy the treadmill and this and that. So basically, Peloton sold off from like 128 to like 97, 98. Plus, they're overpriced anyway to begin with, but Nautilus sold off partially because of Peloton, because those are the only two connected fitness stocks right now in the market. There's another one coming out called Tonal, all right, and this is this thing is like huge. It's like $4,000 or $5,000, whatever. And these guys are looking to IPO. So there's two catalysts. You got your earnings coming out on May 10th. I think they're going to blow away the numbers. All right, but you know what? I'm not very good when it comes to earnings predictions and the reactions. All right, but it's still at a 9 PE. And then when you get Tonal coming out, and there's another connected fitness stock coming out, the big one is Icon Fitness. All right, if those guys go public, that's going to lift the multiples for everyone across the board. All right, and there's only two stocks across the board at this point. So Nautilus is going to benefit from all of that. Okay, so I think it's cheap. Anywhere from 14 to 16. That's a great spot to get in. Like I said, no debt, 70-something% year over year growth, a 9, maybe an 8 PE down at that range. I mean, come on, fundamentally, you can't beat that. One of two connected fitness plays, right? So NLS, love that. Like I said, eBay, they set the bar low. Thank you, Pinterest. They set the bar low. Twitter set the bar low. Twitter said the same thing, right? They said, our users' engagements may drop once people actually have to go back to work and clock in. All right. So that sold off. So they all set the bar low. But eBay, 42% year over year top line growth. Come on, can't beat that. So that in the 53s, 48 area, right? That's a good price level. Genworth Financial, GNW, that's the stock symbol. All right. So, the housing market's been strong. Mortgage insurance, look, if people are taking out mortgages and the housing market is strong and the demand is outstripping supply, you're probably not going to default on your mortgage. So the mortgage insurance companies have just been so strong. RDN, Radiant, MTG, and then there's NIMH. So when you look at these mortgage stocks, they've just been going straight up. Well, there's a company called Genworth Financial, GNW. These guys have a unit called U.S. Mortgage Insurance, USMI. Now, the thing is, Genworth has been stuck under $4 for 4 years because they had agreed to be acquired by a company called China Oceanwide. And Genworth also has a long-term insurance division. Basically, China Oceanwide wanted to acquire them. I believe it was $5.45 a share. That was 4 years ago. And they've haven't been able to raise the funds to complete the transaction. So they actually extended the deadline 17 times. Okay. So fine, or it may have been 17 or 11. So finally, a month ago, they came out and said, all right, we're actually going to terminate the whole buyout here. And, especially with what's going on with the US and China and tensions, right? So that was probably a good idea. So they actually terminated it. And because of that, the ceiling came off, number one. But the backup plan was that if they terminate the merger agreement, then what they're going to do is they're going to IPO their mortgage insurance unit, which is USMI, which is their biggest growth. Once that happened, that's the deal. So in the coming weeks, all right, they're going to IPO their mortgage insurance division. They're going to keep 89% of the company. All right, so only 11% is getting spun off. That's going to naturally raise the valuation. If this thing is underpriced to begin with, all right, I think it's trading at a 10 PE maybe, all right, but it's the catalyst of spinning off the mortgage insurance division, all right, and they're only spinning off 11%. So, if you can get this thing under 368 to 4 area, that's a home run, right? I expect this thing to go at least a five between the 5 and 7 range at a minimum. All right. So Genworth, GNW. Other than that, I'm just looking at technical patterns, and the market just loves to just jump on whatever narrative, be it a good narrative, bad narrative, and the easy trade is just to pile on one way or the other. So these 4 stick out for me. Those are the ones that I'm watching.
Thanks for watching. And if you like the video, do the YouTube stuff, like, comment, and subscribe. And you can also follow us on Twitter at iHub_vision. Check out our last video where we talked to J Mac from J Mac Investing about the SPACs industry. And I'll see you again soon.